Hello students, welcome to today's lecture series on SCT 214 Project Finance, Study Section 3. The title of today's topic is Sources of Fund for Project Financing. Introduction. In the previous study section, you were able to learn the meaning of project according to World Bank definition, various processes of project cycle management, the feasibility report of project finance, and also principle and component of financial analysis. This study section will introduce you to different sources of funds for project financing. You will find this study section interesting as it discusses about different sources of funds for project financing. Outline of study section 3. When you have studied this section, you should be able to explain the different sources of funds available for project financing as discussed in this study section. To itemize different advantages and disadvantages of financing projects via bonds, and lastly explain the factors governing the choice between the different sources of fund. Sources of fund for project financing. In assembling a project financing, all available financing sources should be evaluated. The following are different sources of fund for project funding. 1. Equity. 2. Development loan. 3. Subordinated loan. 4. Senior debt. 5. Guarantee program. 6. World Bank group financing. To achieve a successful financing arrangement, a financing structure must be designed, and that structure must be embodied in a set of contracts which will enable each of the parties to gain from the arrangement. At different times, different capital markets may provide funds in the most attractive terms. There is a wide range of funding sources for debt and equity in both public and private markets available to a project. Looking at the various sources of funds for project financing one after the other, we start with equity. Equity is often raised in the stock market and from specialized funds. Equity, as it is well known, is more expensive than debt financing. Domestic capital markets provide access to a significant amount of funds for infrastructure projects, although capital markets in developing countries may lack the debt to fund large transactions. In such cases, the international capital markets can also provide access to significant amount of funds for infrastructure projects. However, this is generally limited to transactions whose sponsors are large multinational companies. Access to international capital markets by companies in developing countries is generally limited due to their low name visibility in the international financial markets. The next source of funds for project financing is development loan. A development loan is debt financing provided during a project's developmental period to a sponsor with insufficient resources to pursue development of a project. Developmental lender who funds the project sponsor at a very risky stage of the project desires some equity rewards for the risk taken. Hence, it is not unusual for the developmental lender to secure rights to provide permanent financing for the project as part of the development financing arrangement. Developmental loans are typically advanced to the project sponsor on a periodic basis based on the budget prepared to cover the development stage of the project. The developmental lender will typically require liens on all project assets, including project contracts. Repayment of the loan is typically from proceeds of construction financing. Next source of fund is subordinated loan. Subordinated loan is also called quasi-equity, which are senior to equity capital but junior to senior debt and secured debt. Subordinated debt usually has the advantage of being fixed rate, long-term, unsecured, and may be considered as equity by senior lenders for purpose of computing debt to equity ratio. Subordinated debt can sometimes be used advantageously for advances required by investors, sponsors, or guarantors to cover construction costs, overruns, or other payments necessary to maintain debt to equity ratios or other guaranteed payments. Next source of funds for project finance is senior debt. Senior debt is debt that is not subordinated to any other liability. In other words, the first to be paid out if the company or project is placed under liquidation. Senior debt falls into two categories: the secured loan and the unsecured loan. Another source of fund for project financing is World Bank grouping financing. World Bank group financing sources multilateral institutions such as the World Bank for funds for infrastructure development projects worldwide according to criteria which may change over time. Some of the World Bank financing programs are loan programs, guarantee program, indirect support. Then we also have Export Credit Agency. Export Credit Agency use three methods to provide funds to an importing entity. 1. Direct lending. 2. Financial intermediary loans. 3. Interest rate equalization. Direct lending. This is the simplest structure whereby the loans is conditioned upon the purchase of goods or services from businesses in the organizing country. Financial intermediary loan. In financial intermediary loan, the Export-Import Bank lends funds to a financial intermediary such as a commercial bank that in turn loans the fund to importing entity. And lastly, under Credit Export Agency, we have interest rate equalization. Under interest rate equalization, a commercial lender provides a loan to the importing entity at below market interest rate and in turn receives compensation from the exporting import bank for the difference between the below market rate and the commercial rate. Bond. Bond is another source of fund for project financing. Bond financing are similar to commercial loan structure, except that the lenders are investors purchasing the borrower's bonds in a private placement or through the public debt market. In recent years, the use of bond market as a vehicle for obtaining debt funds has increased. Bond financings are similar to commercial loan structure, except that the lenders are investors purchasing the borrower's bonds in a private placement or through the public debt market. The bonds holders are represented by a trustee that acts as the agent and representative of the bondholders. Bond purchasers are generally the most conservative source of financing for a project. The main bond markets are in Germany, Japan, the UK, and in the US. Advantages of financing projects via bonds. Financing projects via bonds offers several advantages, namely 1. Large and liquid market. 2. Longer terms of debt. 3. Less onerous terms. Explaining these advantages one after the other, starting with a large and liquid market. The public debt market provides project sponsors with access to a large and liquid market. In contrast, limited banks and institutional funds are available for international projects. Second advantage is longer terms of debt. The public debt market tolerates a longer average life for debt than those the private debt market. Commercial banks and some institutional investors have regulatory or internal restriction on long-term lending. And lastly, the last advantage of financing projects via bond is less onerous term. Terms of public debt deals are less onerous and contain fewer restrictive covenants than do private debt deals. Disadvantages of financing projects via bonds. There are many disadvantages of financing projects via bonds, like regulatory oversight, ratings. 3. Consent to changes to underlying projects and are difficult. 4. Excess liquidity. 5. Expensive transaction cost. Explaining these disadvantages one after the other, starting with regulatory oversight. Regulatory oversight. Public market deals require lengthy registration process. Second one is rating. Credit ratings are necessary. These are time consuming to obtain and affect the structuring and risk allocation in project contracts. Then we also have consent to changes to underlying projects are difficult in the sense that amendments, changes, or restructuring of a project are extremely difficult to negotiate and complete because of the passive nature of the investment. Then also on the list we have excess liquidity. Under excess liquidity, bond issues yield all the proceeds at once, while in a bank deal, funds are only drawn as needed during construction, although commitment fees are typically levied on withdrawal funds. The company must therefore manage this excess liquidity to best effect. And lastly, expensive transaction cost. Transaction costs are very high for accessing the public debt market. Consequently, transactions of less than 100 million naira cannot generally access the market. Then we have factors governing the choice of sources for funds. There are a number of factors governing the choice of sources for funds used. Such factors are: 1. Investment funds, institutional lenders, leasing companies, contractors, host government. Investment funds investment funds mobilize private sector funds for investment and infrastructural projects. These specialized funds may be sponsored by government or the private sector and include asset funds or income funds, investment management companies, and venture capital providers, money market funds. Under institutional lenders include life insurance companies, pension plans, profit sharing plans, and charitable foundations. This entity can be substantial source of fund. Another factors governing the choice of sources of funds is leasing company. Leasing company, which uses tax benefits associated with equipment ownership, can offer attractively priced leases for equipment, contributing to the overall pool of financing. Then another factors for the choice of sources of fund is contractors. Contractors are rarely able to participate significantly in the long-term financing of a large project due to the relatively modest size of their balance sheet. However, they can provide support via fixed prices contracts, e.g. building a project facility without cost run. Contractors can also assist their clients by providing advice on the financing of projects since they have had considerable expertise in dealing with lenders, potential sponsors, and various government agencies. I've come to the end of today's lectures. Hope to see you in the next class. Have a lovely day.